Hey everybody, and welcome to the SoFi Daily Podcast. I'm your host, Ross Mack, bringing you the market news and headlines that you need to start your day. It's Wednesday, August 2nd. Without further ado, let's get right to it. U.S. stocks cooled off to begin the month, falling on Tuesday after Treasury yields headed to new highs and Wall Street tackled another busy day of corporate earnings. While markets are currently pricing roughly an 80% chance that the Fed will hold rates steady at its next meeting, the U.S. 10-year yield pushed above 4%, closing in on its highest level since November 2022. Now in earnings news, Uber shares fell after the company reported second quarter results that missed analysts' expectations for revenue. However, they did offer positive forward guidance. The company also achieved two major milestones during the second quarter. Its first quarter of free cash flow over $1 billion and its first operating profit. The number of Uber's monthly active platform consumers reached 137 million in the second quarter, up 12% year over year. Meanwhile, Pfizer also traded down as they beat Wall Street earnings estimates but missed expectations for revenue due to a significant drop in COVID product sales. The company's COVID vaccine sales were down 83% from a year ago, and its COVID antiviral pill sales were down 98%. Pfizer is now in a transition period as it pivots towards mergers and acquisitions and a record pipeline to explore new areas of growth. Now, on the economic front, the number of job openings fell by 34,000 to 9.58 million in June, reaching the lowest level since April 2021 and coming in below the consensus of 9.61 million. Overall, the numbers suggest the labor market may be cooling off a bit. Now, moving to company-specific news, CVS Health is cutting 5,000 jobs as part of its effort to reduce costs. The layoffs will affect customer-facing positions in stores, pharmacies, clinics, or customer service centers. The job cuts come as CVS shifts their focus towards healthcare following similar moves by competitors like Walgreens and Amazon. Now, on the whole, the Dow Jones Industrial jumped 71 points or 0.20%. The S&P finished 0.27% lower, and the NASDAQ Composite was down 0.43%. And now moving to the top three headlines that should be on your radar. First things first, Amazon is taking a deeper step into the healthcare industry after announcing it will roll out Amazon Clinic nationwide. The virtual health platform is designed to connect patients with telemedicine providers that can treat common conditions such as sinus infections, acne, and migraines. Secondly, X, formerly known as Twitter, sued the Center of Countering Digital Hate, accusing the CCDH of violating Twitter's terms of service in an attempt to drive away advertisers. The lawsuit comes shortly after the watchdog openly criticized the social media platform for ineffectively regulating hateful content. And finally, BedBathAndBeyond.com is back. Overstock's website just relaunched under the Bed Bath & Beyond domain after acquiring the bankrupt retailer's intellectual property back in June. The move is part of Overstock's strategy to improve customer experience and accelerate company growth by blending its online business model with popular products from the iconic Bed Bath & Beyond brand. Now finally, let's talk about what's about to happen today. Investors are set to receive a slew of mortgage-related reports, including applications, average rates, and the mortgage refinance index. The average 30-year fixed-rate mortgage currently sits at 7.1%, while mortgage applications declined 1.8% for the week ended July 21st. Now on the earnings front, CVS, PayPal, and DoorDash will all offer updates on their respective businesses. DoorDash is locked in an ongoing battle with NYC on if it should pay its drivers a consistent minimum wage. And this decision could set a new precedent across all sharing economy companies. And last but not least, we're breaking down your financial term of the day. Have you ever heard of the phrase EBITDA? That's EBITDA. And that's an acronym standing for earnings before interest, taxes, depreciation, and amortization. EBITDA is a commonly used measure of a company's ability to generate cash flow by focusing on the profitability of the company's operating businesses only. And that's all we have for you today. We'll see you back here tomorrow morning. And in the meantime, do not forget to check out the SoFi app. This communication from SoFi Wealth and Street Sheet is for informational purposes only. It is not intended to serve as a recommendation to buy, sell, or hold any security and is not an offer of a sale of a security. Information contained within should not be perceived as a research report and is not intended to serve as a basis for any investment decision. Any third-party views reflected herein do not reflect the opinion of SoFi Wealth or its affiliates or the Street Sheet. All investments involve risk, and the past performance of a security does not guarantee future results or returns. There is always the potential for financial loss when investing in securities or other financial parts. Investors should consider their investment objectives and risks before investing.